What's up guys, Hector here, and in this video I'm going to do a trade breakdown that I took on NAS this past Thursday, April 25th. So just going to get right into it and kind of explain my analysis and the trade I took and essentially like where I entered and where I got out of the trade. So with trading NAS, because it's so volatile, these are the things that I'm looking at as far as my criteria for placing a trade. I'm looking at market structure. What direction is the market moving in, up or down? Okay. Gaps that need to be filled. So what's a gap? Here's a gap right here, just quickly so you can see right here the distance between the bottom of this candle and the top of this candle. Okay, so that's a gap. See how the price came up to here, filled that gap, and then rejected. That's a gap. And then I'm looking at price levels in pre-market and the previous day. So with NAS and basically under any other pair, whatever session you're trading, which is the session that I trade is New York, price always has to come up or down and grab liquidity. Every level must always get tapped. So we're just trying to predict when it's going to tap that level and when we can get into when we can enter the market at a good position to catch momentum towards those levels. Look how, if we look right here, these levels got tapped right here, right? This level eventually is going to get tapped. This hasn't happened yet, but eventually price is going to come from down here and tap this level. When? We don't know when. So I have my kill zone at NAS, which is market open, around market open 9:30 a.m. to about 10:30 a.m. New York Stock Exchange open. And I'm looking essentially at market structure. Okay, so this is the day that I traded. I took my, let's see, I took the trade right here. I short sold right here, put my stop loss right there. And I want to say I got out right there, but I was shooting lows down here. Price never made it down there. And once I saw that rejection, I just got out. And it actually went completely against me, but we got out with some profits before it actually went toward our stop loss and completely went against us. But essentially what I'm looking at here is, this is the we don't trade before 9:30. So the 9:30 candle is extremely volatile. We don't trade that candle. Okay, I like to put this vertical line right here every morning to see when the market's gonna open. Okay, so we're looking for a break of structure. Okay, we're coming off these highs right here where we see price just breaking more lower structures. I saw this structure get broken right here. This structure broke this structure. It tried to push back up, fill this gap right here, and then it just broke this structure. Okay, so now I'm looking at taking a short position. I'm looking at strictly short to take a position, and so we wait till 9:30 to open, and we want to see a break of structure. We want to see something break around market open or right before market open, and price to come back and fill some type of gap, some type of supply or demand zone, and then we're looking for a rejection for an entry. Okay, so what happened here is I saw this mini channel right here. I saw this mini channel right here get broken. And this is on the 5-minute chart, which is where I execute. I saw this mini channel get broken. Okay. Price was trending down, lower low, lower high, higher low. These are minor breaks of structure, so you don't need to be really too moved by these little mini moves in either direction within the zone. Okay, so low, lower, lower, high, lower low, lower high, lower low. This was a news candle. We never trade news candles. This was at 8:30, and then it broke structure to the downside. It broke this whole little trend right here, this whole little trend line that we see right here, and then it broke this structure down here. Okay, once price started going even past this structure and closing below, then we're looking for a pullback back into this previous trend area. We're looking for rejection back to the downside and hoping to get our profit somewhere down here, which it never made it down there. So once we saw that rejection right here, we got out. Okay, so it broke this structure right here, and then it created a supply zone. Where's the supply zone? Right here. This is a huge supply zone. It never made it to that supply zone, but it did make it basically to where market broke structure, okay, right here. And it filled this gap right here. So let me move this. It filled this gap right here. Price filled this gap. Started to reject, broke candle to the downside, and we got our entry right there. We put our stop loss about right here, and then we took our profit somewhere down here. And on this trade, we made $256 on this trade here. I'll show you right here on my broker, which is Sway Charts. And you can see right here, 256, and that's on April 25th right there. And you can see it's a real account, live account, ECN account. So that was that trade. And we're basically looking to take these little sniper entries every single day on NASDAQ, on NAS100, around market open. So what are the things that we're looking at? Market structure. What direction is what direction is the market moving? How do we tell? Is it forming higher highs or higher lows? Okay, is it breaking structure to the downside or to the upside? If we're seeing breaks of structure to the downside, why would we be looking for buys, right? And then you're looking at levels where price needs to come and tap liquidity to get more momentum in whichever direction it's going. Okay, so we mark these levels. We mark these levels because we know that price has to get to these levels eventually. Okay, so there's levels up here, right? These levels got tapped right here. Okay, these levels got tapped right here. This level before all this happened, this level had to get tapped. It got tapped right here. Okay, eventually, like I already said, this is gonna have to get tapped. This price action is eventually gonna come down and come tap down here. So that's really what you're looking at. You got to look at the pre-market and the previous day levels and look for price to need to move to those levels. Okay, the first thing you're going to do is look at, are we looking for buys or sells? What's the market structure? Is it going down or up? Okay, then let's say market is going up. You're going to look at previous liquidity levels from previous days, pre-market in the previous day, where price needs to get to. And now we're just looking for a good entry, right? We're looking for a break of structure to the upside, come back, reject a level of demand, and then to go back up. So if you wanted to take this buy right here, look how this broke structure to the downside. Eventually price has to come tap all this liquidity up here. What it did is it was breaking structures to the downside, then broke trend back to the upside. We caught the short, but then it came back, grabbed more liquidity down here in this whole area, grabbed demand in this area, right? Took out all these buyers right here, and then started breaking trend to the upside. Okay, forming lower lows right here, then it broke structure and forming higher highs. Higher high, higher low, higher high, broke all these little structures right here, all these little mini structures right here, came back, rejected this zone, and then started making waves back up. So you could have gone for the buy as well. At the time, I was just looking for short, so I didn't take that. I took my short right here. I took my short right here. It started rejecting, and then it started rejecting, took my short, and then it started pushing back up right here. So we got out. We got out somewhere right here. I think this blue candle, once it broke this structure, once it broke this little blue candle to the upside. But I was hoping to take profits basically down here in this level. And that's it basically, guys. That's it, man. We're trying to keep it as simple as possible, right? You don't want to analyze too much different stuff and then start taking things from different pieces of information that you see online and then getting paralysis by analysis, where you're just like second guessing your setup, you're second guessing your strategy, you're second guessing your own skill set. A lot of people are really good, and I was a victim of this for the longest time. A lot of people are actually good at their technical analysis, and then they're so good that they actually start looking at other little things that are going to affect their decision to execute on the trade. And what it comes down to is execution, right? If you're really that scared to execute because of so much technical analysis that you're actually good at, then it's best to actually just trade a smaller position. Just size down on position, where if you do lose the position, then it's just an insignificant amount relative to what you're willing to lose based on your psychology and your own account. But all right, guys, I'm gonna leave it at that. So the top 3 things are market structure. Are we breaking higher highs or higher lows to the downside? Okay. Previous levels of support and resistance, right? Pre-market and the previous day, what did price do in pre-market? So in my case, I trade New York Stock Exchange. So I'm looking at London, which is that's the pre-market for New York Stock Exchange. Where did price move in that area? Okay. Price eventually has to come tap those levels. Okay. It has to come tap the previous day's levels as well. Okay. So market structure, liquidity at support and resistance levels from the previous day and pre-market, and gaps that need to be filled. Okay. Gaps are basically, how do I explain gaps? Gaps are areas of the market where supply and demand are not aligned. And supply and demand always has to become aligned eventually in the market. Okay, so if we come down here, let's move back to another day. Let's go somewhere back here. We'll go right here. There's not a lot right here. Let me see. I mean, essentially, look, this is a gap right here. This is the same thing that we've been talking about. This is a gap right here. This is a huge gap right here. Price broke structure to the downside. It's eventually gonna have to come back up here. So if you were looking to take price all the way up here and cash out somewhere right here, you would be looking for buy somewhere somewhere below this, right? So you would be looking at it's obviously breaking structure to the downside right here, but you'd be looking at some type of breaks of structure to the upside to eventually take price here, which is what I explained right here. This started breaking to the upside right here. This little area came rejected. You could have taken your position somewhere in this area, put your stop loss below this zone, and then taking your profits, into that gap, right? So whenever you see these big gaps, know that price has to get back to those levels. But anyways, peace out, guys. Happy trading.